So, you've decided you want to start trading. That's awesome. It's an exciting step, but let's be real, that very first move can feel like you're staring into a thick fog, right? Like, where do you even begin? Well, don't worry. We're about to give you a clear, step-by-step map to get you from right here to placing your first trade with confidence.
You've got the ambition. You're ready to put your money to work, but that one question just hangs in the air. Where do you actually begin? It's the big question that stops so many people before they even start. Today, we're going to answer it, piece by piece.
Here's the roadmap we're going to follow. First, we'll get you through the front door. Then, we'll teach you the actual language of the market. After that, you'll build your own personal trading blueprint, learn the one rule that keeps you in the game, and discover a simple tool for getting better every single day. Sound good? All right, let's dive in. Okay, first things first. You can't trade if you can't even get into the market, right? You need a key to open that door. And in the trading world, that key is your broker. Choosing the right one is your very first and super important decision. So your first choice really boils down to your style. Ask yourself, are you the slow and steady type, playing the long game? Then a broker like Upstocks, which often has zero fees for long-term investing, might be your best bet. Or are you going to be a more active in-and-out kind of trader? Then you'd want to look at something like Zeroda, which is known for having the lowest possible fees for frequent trades. See, the question isn't which one is the best, it's which one is the best for you.
Now, why are we making such a big deal about these fees? Because of this one critical fact. You have to pay brokerage and tax even if you are making a loss. Just let that sink in for a second. Brokerage is like a constant, small leak in your boat. It doesn't care if you're winning or losing, it's always there. As a beginner, your number one job is to plug every hole you can, and that starts with getting those fees as low as possible.
Okay, you've got your key to the market. Now you need to learn how to speak the language inside, and that brings us to step 2, understanding something called price action.
Forget all the complicated, jargon-filled definitions you might find online. Price action is really just the skill of reading the story the chart is telling you. What is the price doing right now, and what clues is it leaving behind about what it might do next? It's not a crystal ball, not at all. It's about learning to read the evidence that's right there in front of your eyes. And this quote from the legendary trader Jesse Livermore, man, it just nails the entire philosophy perfectly. To anticipate the market is to gamble. To be patient and react only when the market gives the signal is to speculate. Gamblers guess, they hope. But traders, or speculators as he calls them, they wait for the market to show its hand and then they act. Price action is how you see that signal. Let's actually see what this looks like. Here's a quick breakdown of a trade. First, you spot resistance. That's the ceiling where the price keeps hitting its head and falling back down. Second, you see the upward trend start to falter. But, and this is key, you don't do anything yet. The third and most crucial step is to wait for confirmation. That big red candle right there. That's your signal that sellers are now in control. Only then, after all that evidence, do you enter the trade. You see the difference. You're reacting, not just guessing. So, now you can read the charts. The next step is to write your own rulebook. This brings us to Section 3, Building Your Blueprint. This is your personal strategy and plan for how you're going to trade. Think of a trading strategy as your personal rulebook. It defines exactly how you trade. Now, here's probably the single biggest trap for beginners: strategy hopping. You try something, it doesn't work a couple of times, and boom, you're on to the next shiny object. You have to resist that. Stick to one strategy for at least 100 trades. That's the only way you'll ever know if it actually works for you or if you just had a bit of bad luck.
And if the strategy is your how, then the trading plan is the what and when for tomorrow. I want you to think of this like a pilot's pre-flight checklist. Before the market even opens, you should already have all this figured out. When will you trade? Which specific stocks are on your radar? Where are your exact entry points, your profit-taking points, and your get-me-out-of-here stop-loss points? And most importantly, what's the logic behind each of these potential trades? You do all this work the night before, so when the market opens, you're just executing your plan, not making emotional decisions in the heat of the moment.
All right, this next part. This is arguably the most important thing you are going to learn today. Section 4, the golden rule of risk. This isn't about how to get rich quick. It's about how to stay in the game long enough to even have a chance at becoming profitable.
And the rule is so simple. 2%. That's it. Never, ever, under any circumstances, risk more than 2% of your total trading capital on any single trade. If you just follow this one rule, you could lose 10 trades in a row and you'd still have 80% of your capital left to fight another day. This rule isn't just a suggestion, it's your survival mechanism.
And here's the beautiful math that makes that rule so powerful. It's called risk to reward. In this example, you're risking 1,000 rupees to potentially make 2,000. That means your potential gain is double your potential loss. When you set up trades like this, you can be wrong twice, get it right just once, and you still break even. When your winners are bigger than your losers, you don't have to be right all the time to make money. It's an absolute game changer. Okay, you have your tools, your skills, your rules, and your safety net. What's the final piece of the puzzle? Let's talk about Section 5, the trader's logbook. This is your secret weapon for getting better over time. After every single trade, I don't care if it was a winner or a loser, you need to write it down. You need to log it. What stock was it? What happened? What mistakes did you make? What was the specific reason a trade lost? And this one's huge. How were you feeling? Were you feeling greedy, scared, anxious? This journal is basically your own personal performance review.
So why is this so important? Because, let's be honest, your memory is gonna lie to you. It'll conveniently forget the dumb mistakes, and it'll downplay the times you traded out of fear. A journal doesn't forget. A journal shows you the patterns you can't see day to day. And it's simple. You can't fix a mistake you don't even realize you're making over and over and over again. All right, we have covered a ton of ground. So let's bring it all home in our final section, your 6-point summary. I want you to think of this as your beginner's pre-flight checklist before you ever risk a single rupee. And here it is, your entire roadmap in 6 clear steps. Number 1, choose the right broker to keep your costs down. 2, learn price action so you can actually read the market. 3, develop one strategy and stick with it. 4, create a daily plan so you trade with your head, not your gut. 5, master risk management to survive. And number 6, journal every single trade so you can actually improve. That's it. That's the foundation. And look, if you only remember one thing from our entire chat today, please let it be this quote. Don't focus on profits. Focus on managing your risk and the profits will follow. As soon as you shift your mindset from chasing wins to protecting what you have, everything changes. That's the real secret to longevity in this game. So, we've laid out the map for you. The path is clear. My question to you is this. Now that you have the map and you know where the biggest pitfalls are, what's the very first mistake you are going to consciously focus on avoiding? Thinking about that, well, that's your first real step as a trader.